You think the market is always against you. On gold, let me show you how stop hunt works. In this video, I will teach you why gold keeps stopping you out and how to avoid it. Remember, when it comes to trading, you can never avoid losses. You see, losses are something that you would always take. Traders always have time when they are on a losing streak. They can go 1 week, they are losing back to back. They can go 3 days, they are losing back to back. What matters is how you bounce back. Do you understand? When you notice you're losing, don't be in a rush to be taking trades aggressively. Just take 1 trade per day, stay patient, so that when you start winning, you can bounce back from those wins. Now, let me give you some of the stop loss hunts that most people ignore when it comes to gold. They just want to buy, they just want to sell. Now, let's go to the gold time frame. Now, if you come to the gold time frame, the first thing you want to look out here is this. Now, take for example, right? Take for example, you want to buy gold. Now, immediately most people see this. They've seen this bullish candle 1, they've seen this second bullish candle 2. Automatically, they've seen this. They'll say gold is rejecting this level here, right? They'll say gold is rejecting this level here. And what would happen next? They push to the upside. But you need to remember that there is a gap here. Do you understand? There's a gap that was created here, and there are liquidities resting around this zone. Do you understand? Now, what would happen? Gold would likely do as if it wants to start pumping, then dip back down. Now, when gold dip back down, remember this is your left shoulder, this is your head. You want to buy here on the right shoulder. This is the safest part that you will want to buy gold. Anything aside this buying, if you're buying here, you want to make sure the only reason why you buy gold on this level, it will be if gold should break above here. Alright? If gold should break above here, then you want to wait for a retracement and you buy. Do you understand? This is why gold continues to stop trader out every single time. Now let's talk about liquidity zones and how banks trap you. I've given you an example of how a bank will trap you, make you to think that this market is bullish, and you end up buying it, and after you buy it, you notice market is now retracing. Now you're now angry with yourself. Meanwhile, you were right. The market is actually bullish, but wait for the market to come to a discounted price so you can buy. Okay? Now look at this time frame. This is your 30 minutes time frame. What happened here? 1, 2. There was a liquidity resting around this zone. There's also a liquidity at this point here. Always remember, when it comes to liquidity, whenever you spot exhaustion, there's a liquidity resting at the top, there's a liquidity resting at the bottom. Alright? Now, what is resting at the top here? A liquidity. What is resting at here? They call them trend line liquidity. Now, what did you see happened? Gold spiked up. Immediately gold spiked up, what did gold do? It cleared all the liquidity from here to here. Then what followed next? A huge dump to the downside. Can you see? After clearing both liquidity, what followed next? A huge dump to the downside. So always make sure when you're buying gold or selling gold, the market has taken out liquidity, so that you will not be the liquidity. Because at the end of the day, institutions need retail liquidity in order to pay themselves. Please. Now, let me give you another example. Now, look at this part here. Look at this part here again. What can you see here? 1, 2. Did the market created an exhaustion or not? This is an exhaustion, right? There are liquidities resting at the bottom. Now, what happened here? This is exactly what happened here. The market spiked down to clear this liquidity, came back and continued pushing. You can see it. After clearing the liquidity, you will notice a huge push to the upside. The market will come back to test this level. The market will come back to test this level here, where the point of interest is, where the POI, where the buy started from. The market will test it. Then what happened? Continue pushing to the upside. Do you understand? Always make sure where you're buying, where you're selling, liquidities are not sitting there. Because if you're buying and selling where liquidities are sitting, gold will always take you out. Because if there are pairs that always pay attention to liquidity, is gold and GBP JPY. You see these two pairs, they will always take you out if you're not patient. And how do you spot those liquidity? You can move to 30 minutes, 15 minutes, 5 minutes. It will make you spot them faster than bigger time frames, because on bigger time frames, those liquidity zones might just be one candle. But when you go to the smaller time frame, take for example, you see one candle on 4 hours. On 1 hour, that's 4 candles. On 30 minutes, that's 8 candles. On 15 minutes, that is 12 candles. Do you understand? So the lower the time frame you go, the easier for you to spot liquidity zones, know where this market will retrace and push. But always remember, when you spot liquidity zones at higher time frame, you would make more money from the market. Do you understand? Just that it will take time before the market will get to that zone. Okay? Now let's do one more, then we move to 15 minutes time frame. Now this is your 30 minutes time frame again. What can you see here? Another consolidation, right? Also known as what? An equal high. Always remember, when there's an equal high, the market will always come back to clear the liquidity and done. What is an equal high? The normal M formation that everybody is aware about. That is what was created here. And what happened? The market cleared the liquidity. How would you know that the market cleared the liquidity? Immediately the market clears it, the next thing that you see is this candle formation. Next thing that you see is this candle formation. For what? If the market cleared a bullish liquidity, let's say there was a consolidation here, right? Then you see this, then this market dump here. What will happen? The market will continue selling. Then let's say, for example, there was another consolidation here, okay? Then you spot this candle, huge dump. Immediately the dump follows. What follows next? A huge pump follows next. Can you see? You would know that a liquidity was what? A liquidity was cleared at this zone, and a liquidity was also cleared at this zone. Do you understand? For this, you will know that the market will continue selling. For this, you know the market will continue buying. This is an example, and the market continued selling. Move down to this point. This is an example, and the market continued buying. Do you understand? Now, if you should scale down to 15 minutes, everything that I've explained here, you will still spot them on your 15 minutes time frame. Remember, when it comes to trading, you can never control how much you'll be losing. Just always control the amount of money you're losing, so that you will always have capital to bounce back. That is how you stay profitable. The problem why you see individuals are not profitable today is because most of them don't wait. They are always in a rush to buy or in a rush to sell. So please take note and always make sure you're not part of those people always rushing to buy or always rushing to sell. Okay? Now this is the 15 minutes time frame. What can you see here? What did the market do? Cleared the liquidity, then a huge dump follow. Sometimes you can always wait for the market to clear that liquidity, then you buy. Do you understand? Always wait for the market to clear the liquidity, then you buy. It's safer that way. Alright? So thank you all for watching this video. You have a nice day. Peace.